and welcome to Coffee is for Closers. I'm your host, Tim Brigham, and today we're going to do something different. I've never done this before. Today I'm going to bring on a rising star, a badass loan officer, somebody I have the utmost respect for. I've never interviewed another loan officer on the show, and this one deserves absolutely all the credit and to come on. Today with me is Derek Malley.
Tim, thanks so much for having me on. And to say that I'm the first loan officer on this show, I'm pretty excited.
Yeah, man, I'm excited to have you on.
Yeah.
I'm excited to have you on. I've been your biggest fan for so long, and we've been, let's see, I think you've been here a year as of right now, right?
Just about 12 months and 2 weeks.
And you're already ranking for President's Club.
I'm already up there, baby.
I love it.
Number 50.
I can't wait until this month is over because you're going to start blowing past everybody. It's so great. It's so cool to see your progression.
Yeah, no, and like you said you're a big fan of mine. I'll never forget, I'm sitting at my computer, or I'm sitting on my phone, right? We're not really on our computers anymore.
Okay.
And my buddy sends me a video, okay? And it's you doing Coffee is for Closers.
Oh, wow.
And I'll never forget, it was like a ESPN type style video where you're going through all of the top producers for that specific area.
Yeah.
And I remember thinking to myself, what a badass video this is.
Oh, wow.
Right?
Thank you.
Secondly, what a cool idea this is to market people as well, too, and to open the door. But now to be on the show, it's very like full circle for me.
It's so cool.
Yeah.
It's so cool. I've had a lot of fun doing this, and to hear you say that is incredible. You hope that like people watch your show and they don't think like, who is this guy? Like, what's he talking? Like, I hope I actually am a value add to people.
Yeah.
And I think it goes further than that. I think that a lot of the people we've interviewed, what I think a lot of people miss in real estate is that the stories behind the scenes, the people that make up the transaction, I'll say it again, I've never met anybody who's a top producer in real estate that doesn't have an incredible story, that doesn't come from something that is wild, that they overcame, and then they got on, now they're a top producer. I mean, I would love for our audience, for people who haven't met you, introduce yourself, please.
Of course, yeah. So Derek Malley, if you touched on, I'm from the area. I'm from Palatine. I live downtown right now.
Okay.
How I got into this industry right out of college. I worked for a top producer for Wells Fargo. I was essentially doing their grunt work for about 2 years.
Okay.
Yeah. And
what year was that?
Right out of college. So that was like, I don't know, like 2013, 2014, So we're talking grabbing coffees, picking up dry cleaning, doing 1003s, doing W-2s, all that.
Had you picking up dry cleaning?
Oh, I've picked up some dry cleaning.
Wow.
I've dropped off some cars to get detailed, But hey, listen, in this industry, sometimes you got to do the grunt to be able to learn some of the business, right?
And you came in just post, the 2008 crash, right?
And so I was actually brought in to do data entry.
Okay.
I was solely brought on to do data entry. The shop that we were at had brought on a new software at the time. And the loan officer I was working for, great loan officer, not a great admin/computer guy, as most could be, right?
Wow.
So I was brought on strictly to do data entry, and I got about 6 months into it, and then they started to kind of roll me out, right? And I was working in some of the offices, taking on some deals, calling on refis. So here I am today. It's
wow.
It's been quite the climb since.
It had to be amazing to join in 2013 because we were still dealing with foreclosures. We're still dealing with short sales.
HARP was a thing.
HARP was a thing.
Yeah,
that was the product everybody wanted, right?
And I likened the beginning of my career to almost like video poker. And what I mean by that is, when video poker first came around, kids, young adults, they could get on there and they could play 10 different hands at once, right? And me coming into a top producer's branch and their team, I got to get about 10 years of experience within 2 years.
Wow.
Because I was touching so many files.
Yeah.
We were doing anywhere from 8 to 10 million a month.
Wow.
And to be able to have that exposure, to not only pick up on some processes, to see what kind of issues you can run into, I kind of got it all up front.
So let's scale it back, right? For those that don't understand, what is the HARP product and why was it so popular back then?
So HARP product, but I mean, that was primarily doing with refinances and refinances with properties that were underwater, right? If someone had a property that they bought and it's not necessarily worth that value anymore and they're struggling to come up with the payments, it was like a streamlined refinance to help alleviate some people with some of their payments.
Yeah, and it's funny. We hear some of these comparisons with the current market that we have going on, and it doesn't compare. Right? There's a drastic difference. We were dealing with people who were very far underwater, and they were trying not to go into foreclosure because they took an ARM or they took something that has an adjustable, adjustment at some point, or even just a really high interest rate because of their credit or whatever was going on. And the terms that were used were Band-Aid program and other stuff back then. And it turns out the market adjusted, and they can't afford the payments. They need to come out of this thing and refinance. So the government came out with a product to give them that ability. So it's very popular. Yeah. And what's interesting is that if we waited just a few more years, any client that was able to weather that storm, home prices eventually resolved, right? We came above it.
Skyrocketed.
Yeah.
Relatively.
Yeah, so it's when you compare it to this market right now, there's no comparison. This is, yes, we have higher prices. We do have interest rates a little bit higher than what was, COVID, right? It's a drastic difference there, but for historical market, but it's not that people are dealing with a 2008. It doesn't look like it's in the cards, right?
Right. Yeah. I mean, I think property values are even going to go up.
Yeah. Yeah.
I'd be surprised if they wouldn't, right? I mean, especially considering interest rates are starting to fall our direction.
Yeah, we'll see. And I think it's really interesting. If we have an inventory crisis right now and we have cost of money arguably higher than what people digest, right? But we see the cost of money come down, that doesn't mean inventory is going to show up, right? It's going to just further that. So we'll see home prices follow it.
Well, and I always like to say, all the people are like, hey, I want to wait for interest rates to drop, and I love to tell them, hey, listen, you can always refinance your interest rate. You can't refinance your purchase price.
Yep.
Okay. And what is 550 right now at 6.5 is going to be closer to 6 once you're at 5.5% interest rates.
Yeah.
Right. You can always refinance that rate. You can't refinance your purchase price.
Yeah, it's permanent. Once you overpay, you can adjust the rate all you want. You still have to pay the amount that you purchased it for. Versus, arguably right now, you can still negotiate and always refinance and revisit that at a later date, right?
It was great. I actually had someone today ask me for payment figures on a house, and it was listed at $599, and they said, "Hey, Derek, listen, we're actually going under $599." And I mean, how long's it been since we heard people going under list price?
Yeah.
Right? I mean, it used to be one of those things where, hey, listen, I'm not showing you anything under $650 on this house because that's what it's going to go for.
Yeah.
Right? Now it's almost kind of relieving to hear that again.
So walk me through it. How do you help a client like that that's going under, and what do you do that's different than our loan officers?
Well, I think one of the things that I do is I make sure they have a relationship with their agent. Okay. Especially right now when you have listing agents that are vetting out 10 to 15 different options. If you can show that you have a cohesive group with that agent, it gives you at least the appearance that you guys are buttoned up, right? Now, how do we do that? One thing I learned from you is we're calling ahead of, or at least once an offer is out. If you can hear from someone, talk to them, and know what's going on with the file, you should feel pretty good taking that offer, right?
Yeah, it's that human element. So many loan officers don't make that phone call out of laziness, or they just haven't been taught how to do it. They just think that they're supposed to get back involved once the offer gets accepted. But if you're not standing in front of your negotiation, if you're not standing in front and saying, hey, I'm here, I'm going to be with you, holding your hand, making sure that you're okay too, meaning the seller side, seller's agents need help. They need to know that the loan officer is going to be available, that they're going to solve problems, they're going to, is this offer real?
Yeah.
Did they verify income assets? Those types of things, right?
I mean, 9 times out of 10, I hear them shuffling through the stack just to notate our letter, right? How powerful is that? On top of that, I always make sure that we give a clean, buttoned-up offer, so I'm reviewing it with the agent, make sure that we're doing terms that are going to be agreeable to the seller.
Yeah.
It surprises me how often people don't vet out what the seller's looking for. Are you looking for a quick timeline? Are you looking for a rent back? All those things are factors, right? And when you have 10 or 15 offers, that could set you apart.
I think that the thing that jumps out at me, and I'd love your feedback, but I think that jumps out at me is the most frustrating relationship between a lender and a realtor at the offer stage is I get this question a lot. What interest rate should I put on the contract? And it gives me pause, where the sole purpose of putting that on the contract is an out to the contract. So if you put a rate on there, you can, but you know that you're telling the seller's agent that if the rate doesn't come in at that, they have an ability to come out. Yeah. Well, I've seen agents put current market rates. I've seen them put, language on there that says, we're not getting out of this. We're in this. We want to buy this place. Yeah. We're not 50-50. Or, my foot's not just barely in the door. I really want to buy this house.
I want to buy the house,
Those little tweaks make all the difference in negotiating. Right?
Yeah, no, it really does.
What do you think you help realtors the most with when it comes to negotiating?
Well, I think, to be honest with you, I'm one of those people who are constantly, accessible, right? And what I mean by that is, just like yourself, I'm picking up the phone. I'm there on the weekends. I'm coaching them through just how solid this client can be, right? And on top of that, what we're also doing is, like we had said, we're looking at the terms, right? Here we have the ability to get a 2-week deal done if we need to, right? So just making sure I'm a resource in there when they need me to put in the offer.
I love the fact that we can submit a client up to underwriting before they even find a house.
Pretty sharp, right?
Game changer.
I mean, I have 3 of those going right now, and they're offering 10-day close dates.
Yeah.
And I mean, they get their pick of the litter.
I mean, it's the biggest difference when you can go to the seller and say, hey, look, my deal's done. I need title, I need appraisal, I need condo docs, but on the lending side, we're already done. We're already signed off on. That gives real strength. And I say this to clients and agents on the regulars, that sometimes we have to appeal to, the seller. The seller's the one going, okay, I got to sell this place to buy the next one, and this better go through, because if this doesn't, I can't buy my other house and I got to move. So they're just stressed out because they're under contract for another place and they don't know if their place is going to sell, and everything falls apart.
It's all the uncertainty, right? It's all the uncertainty. I mean, I'll take it one step further there. I have another client who we've underwritten. He's went to put in an offer on a house this weekend. I was able to look in our system. We're getting a PIW on that, or an appraisal waiver on that deal as well too.
Wow.
So already approved, no appraisal. Tell me how that's not as good as cash.
Yeah.
That's as good as cash.
Yeah, I mean, it's the next best thing.
Yeah.
Right? I would agree it's the next best thing, because do we still have to get a loan? Yes, but we've already done all the work.
Yeah, it's done.
What is your experience, speaking of UHM, what has your experience been here so far?
So I'll talk about this from a couple different angles. From
cool.
from a culture standpoint, but also from the company standpoint as well too. I've been at numerous shops, some local, some giant ones. And one of the things I've always been looking for was that cohesion and camaraderie.
Yeah.
Okay? I've been and I wanted to be surrounded by people that were better at what I do than myself. Wow. Right? And I've gone to shops to look at this, and I've gone to shops to be surrounded by this. And, there's been a few places where I just wasn't feeling the love, right? I was looked at more of a competition than a colleague.
Oof, that's the worst.
Brutal.
It's the worst, because you don't trust the people sitting next to you.
Why would you, right?
You don't want to have a conversation and them hear a realtor's name, and you're like, oh, great, now you're going to call my agent.
Right? It's uncomfortable. It's uncomfortable. And why work in an environment like that? So from a culture standpoint, this place has been a complete 360 from where I was at, or 180, whatever the degrees is there, right?
Complete 360. We're back to where we started.
360 or 180, wherever it is, because now I'm surrounded by loan officers who are doing things differently, who want to listen, who want to sit there and maybe collaborate on something as well too, right?
Yeah,
just like we're doing right now.
Like you want to help each other.
Right.
There's enough loans out there, and if you're that aggressive, if you think that you need to take from everyone, eat off everybody's plate, you can do that, but you're going to be alone.
You're going to be alone.
It's a lonely place to be.
Yeah. I mean, my mentor told me, and really, really ingrained in me, that it's all about pulling people up the ladder, and that's what he did for me. And I'd be a fool to not do that for other colleagues as well too.
Yeah.
Right. So I'm the first one to share any marketing things I've came up with. I found a product, and in doing that, surrounded by my colleagues, now they're doing it to me as well too. Right.
And when you're winning in the market, it helps me win in the market. Right.
Oh, yeah.
One of my favorite things was recently somebody came up and they go, "Hey, my offer just got accepted because of you." And I went, "What? What are you talking about?" They're like, "I don't know. The agent knows you." And they said, "If you're with Tim, we're good." Right? I've had run into agents that know you. And it's like, we're all helping each other versus this, "I had a bad experience with Derek, so I'm not accepting the offer." Right? Like that's a rough brand to create. Instead, it's a bunch of people helping each other so we can all win.
Absolutely. Right. And like I said, I've been looking for that in the shop, and it's really, truly great to find it now. Right. Because previous, I had marketing ideas I wanted to do. I had branding ideas I wanted to do, but I would look around and I'm like, I don't really think I want to be a part of this place.
Yeah.
Right. So it's really hard to get out there and grind it out and build this stuff when you're not even happy with who you're building it for.
Right.
Right.
There's a question mark.
Absolutely.
Right.
Absolutely. So I think from a culture standpoint, complete 180 degrees from where I've been, and I couldn't be happier with where I'm at now.
I love it, man. You've come in like a bull in China shop. You've been coachable this entire time. I think you're in PCP now, right?
Yep.
And it's Partners Coaching Partners, our training program, and it's our coaching program. It is it's night and day of a difference of any other organization that I've ever worked for. And to watch people like you come in and have the exact same experience is really cool.
Well, it's cool to hear that something's going to happen and then it actually happens.
Right.
It's not one of those things where it's okay, now you're in the door, our rates are 7%, our origination's going up, and we can't get a deal done to save our life.
Yeah.
Right? It's when you're getting recruited, you hear all these things. And a lot of the time too, you're like, hey, if it's too good to be true, it probably isn't, but it's great to actually be here and vet all this stuff out and see that it's actually for real.
Yeah.
Right. And
I love it.
And I've now been a part of bringing people on as board too, right? And it's for me to to tell people how it is and for them to feel the same way, I'm sure you get it all the time too. It's such a rewarding feeling.
Yeah.
Right?
Yeah. What where do you see the future going? Where do you see yourself in this business?
I mean, to be honest with you, I always see myself producing, right?
Okay.
Like yourself, I do like the ability, and I do like coaching as well too. So I do see myself building and developing a team here, But getting out of the producing space, I never see that being the case. I feel like I've seen too many people do that. It doesn't really work out the best for them. Yeah,
I mean, it's different for each person, right? And it's gladiator mode is definitely a thing when you're standing in front, and I look at through the same thing. I'm like, I'm always thinking I'm going to be producing, but you look down as you start to get older and you start to go, okay. There's a thing with coaching and leading people where when somebody else is successful because of the words that came out of your mouth,
mm-hmm.
It's just as cool as when you get to clear to close. It's just as cool when you're earning the new relationship. It's a lot of fun to help somebody and put them in a better spot. I could totally see you doing it.
100%. And and I hope I don't get in trouble for saying this, but in a lot of ways, I almost like working with loan officers more than I like working with real estate agents.
Wow.
It's we talk the same language, if you will, right? So it's a little bit easier to communicate.
I was on a call today, and we were talking shop. I was teaching a bunch of agents, different products, answering questions, those types of things. And I just think there's a lot of misinformation out there, right? There's nothing wrong with the agent. It's just that they're getting their news from Facebook or that one loan officer that they know that maybe is in a specific situation, right? They've got their own way that they do things, and they think all loan officers are the same. Reality is that there's so many different versions of us, different platforms, different reasons as to why you want to work with this person or that person, and also personalities, right? Some people, it's not a good fit. That's okay. You just have to decide who you want to work with, right?
Well, and that's just it too. I'm surprised at just how complacent some agents are with their lender partners.
Oh, wow.
Right? I'm like, hey, so why are you working with them? I don't know. That's just who my client sent me. Or, yeah, you know, an agent in my office was working with them. Or, hey, they saved, you know, in some instances, hey, they saved a deal for me. I get that, right? But, you know, here, and especially with what you're coaching, it's all about providing value. And I'm like, so what are they doing for you?
Yeah.
Right? And they're like, well.
So give it to us. What do you do for agents?
You know, well, I think that, like I had said, I'm their resource, right? I'm their friend. Okay.
Yeah.
And that's really how I approach this business, because I learned a while ago, people are going to use me because they like and trust me. Okay. And as long as you can be that person, you can be that resource, you can be that reliable tool to them, they're going to continue to come back. Right. How often do I have someone who I've never done a deal with ask me to pay for their Zillow leads? Right. That's an immediate, hey, I don't think we're going to be a good fit. Right. I usually
Why?
don't. Well, because I find that usually relationships that start with money will end because of money, right? What I mean by that is there's always going to be someone willing to throw more dollars at something. There's always going to be another lead generating system that they're going to go after. That stuff doesn't really develop a relationship. It's kind of short-sighted.
Yeah, I think that, and I would encourage anybody watching this to reach out to you, right? Is that there are tactics we can use within the space where we can generate leads without spending any money. And I think a lot of agents don't know that there are plenty of ways to generate business where you're not having to pay a company and be victim to whatever leads they give you.
Yeah.
You know, I had a conversation with an agent one time, and he asked me to do a Zillow program, and I'm not opposed entirely to doing it.
Yeah.
You know, I'm not, but I have questions. Right? It's like, okay, so you want to do Zillow? Why? And his answer was, well, you know, Tim, I'm really worried about this market, and it's coming into Christmas, and you know, I just don't want to go through Christmas not closing any deals.
Yeah.
And I said, agent, you know I love you, right? No matter what happens, we're going to stay friends. But if that's your answer, I'm going to be out. Unfortunately, that's you're going to spend money, and I'm going to spend money, and guess what? You're still not going to close anything, and now you're out that money, and now I'm out the money, and we part as friends. It's not a replacement to the business. It's an add-on, right? If you want to do that, it's completely fine. But if that's your sole reliance, it's going to be, you're always going to be a part of it. I'm not judging any agent that does Zillow at all, but there are things that you can do that generate business without, you know, spending money. Like, what about your current clients? Like, what about your past clients? What about, you know, your people that your dry cleaners, right? There's ways, and anybody watching this, I'm not going to spill the tea. You got to reach out to Derek. He's going to teach you how to do this because we're of the same class.
The current client referrals is one of the new things I've picked up on.
It's wild, right?
And it kind of like smacked me in the face why I haven't been doing this, right? People enjoy working with us. They're having a great process. They're about to close on a home. Most people that are looking for a home, chances are they have friends that are looking for homes as well too.
The first time I did it, because I was not a fan, I was like, it's too aggressive. I don't know that this is uncomfortable.
Yeah.
The first time I did what I was supposed to do, the client was under contract, and I used exactly the system that we use. I got 2 referrals, and I screamed in the middle of my office. Why haven't I been doing this whole time? What is wrong with me? And I was so angry with myself because it was like, it's really that comfortable and easy? Like, now every agent that sends me business, my commitment and your commitment is we turn them into referrals, right?
Try to, you know?
Maybe that's the most important thing, not Zillow, right? Maybe it's treat Derek like a CRM and he's going to market on your behalf and earn more business.
Well, and what I've come to realize as well, too, us as loan officers, I think that we're much better at that database mining, marketing, staying in front of drip campaigns. You know, agents are out and about showing people. We're typically plastered in front of our computer, at least to do some of our work, right? Like, I find we're much better at following up with clients, turning some of these into CCRs than a lot of their agents could be.
Yeah, and I mean, it's a true partnership at that point.
Yeah.
Right? I mean, you're actually a partner with this agent versus just the person who funds their deal.
You know what else was one of those other things, too, where I was like, why haven't I been doing this, was our Tuesday update calls. And for those of you who don't know, we're calling every single party on the transaction on Tuesdays just to give them an update. you know, buyer's agent, buyer's attorney, seller's agent, seller's attorney, so everyone knows.
Yep. Well in advance.
Yeah.
Well in advance.
I mean, it makes us look badass. Can I swear in here?
Yeah.
And at the same time, it deters a lot of those calls and reach outs that we're going to be getting anyways.
Yeah.
Right? Hey, what's going on? Where are we at? Where's the appraisal? Gets rid of all that.
We make that commitment in the beginning. We make that commitment to the seller's agent and say, look, here's the deal. You're going to hear from me every single Tuesday on what's going on.
Yeah.
Right? When I get out of this filming, that's what I'm doing is I'm calling every single person on my transactions, letting them know everything's okay.
Yeah.
There's no issue. The appraisal's due back this day. You've been submitted to underwriting. Here's where we're at. Everything's okay. Everything's okay. So they can earn referrals out of their seller's agent because they're in the know. Versus, man, if a seller's agent's reaching out, that means we didn't do our job. We didn't communicate. And that's just not fair. It had stress for no reason.
100%.
Right?
And I'll do you one more. I got an email this week. Hey, Derek, just wanted listing agent on one of our deals. Out of the blue. Hey, just wanted to let you know this experience has been absolutely a pleasant one. Right?
Wow.
We've heard from you guys everywhere, every which way. I know exactly where the thing is. Can we get together for coffee?
Oh, wow. That's amazing.
Can you believe that?
That's amazing.
I'm getting invited out for coffee from a real estate agent.
Yeah.
I didn't think that would happen. You know, it was great.
That's incredible. That's what a compliment.
Right?
You know?
Yeah, I made sure to send it to everyone. We were excited about it.
So let's scale this back a little bit. Talk to me about you. Like, what do you enjoy doing, you know, in real, like, what's your favorite part of this business?
I'd say the networking piece of it. You know, I've always kind of been the life of the party, if you will, someone who has no problem talking in a room of strangers. And I think this job has allowed me to kind of harness that to my benefit.
Yeah.
Right? You know, on top of that, too, I always thought, even in college, you know, mind you, in college, I probably couldn't even spell the mortgage, right? Yeah. But I always thought I wanted to be in a job that I can control my destiny, my income, because I'm usually going to work harder than most, right? And now that I can truly decide how hard I want to work, when I want to work, for what hours, it's truly the flexibility and the control of it I absolutely love.
So let's talk about that a little bit. I know there is flexibility, right? But there really isn't. Because we're obsessed. 24/7. We're obsessed.
I'm on call 24/7.
Talk to me about that. Like, why do you enjoy mortgage out of everything?
You know, the easy answer is the people, right?
Okay.
You get to work with people, right? But ultimately, like, this kind of got to be one of those things that I've determined that I'm good at.
Okay.
Right? You know, whether it be piecing together a deal, getting creative, taking a deal that someone else was able to get declined and turn it around, that whole puzzle part of our work, I really, really do enjoy, right? On top of that,
there's nothing better than going and dunking the ball on another lender.
Oh, right? It's the best.
Yeah.
It's the best. And the best is when you can see it from a mile away, right? Hey, Derek, listen, we got declined for this reason. I can already tell you what's going on and how we're going to fix it, you know? And then you feel great, right? You're like, this is how I do it, you know?
Yeah.
And that's a good way.
And the best part is that this loan we're going to do right now, guess what? I'm going to redo it here shortly because we service our own paper, right?
Well, I'm learning very quickly that is a huge, huge benefit. You know, when I first decided to come here, the culture was one thing, the coaching was another, okay? But I didn't realize until I got here just how impactful the servicing is.
Yeah.
Not from a sales standpoint with clients, with consumers, with after the fact. And now our book of business is effectively a pipeline that we can shop and look for and kind of prod out of.
For the audience, what does that mean? Like, what does that mean we service our own paper?
So we don't sell our home. We don't sell the servicing on our home loans.
For most of them, right.
Correct, for most of the time, right? Now, if you're using another shop, generally they're going to close your loan and they're going to sell it to the mortgage servicer, right? Yep. But here, we don't do that. We keep it in-house. How that impacts the clients is numerous, right? One, we don't have many restrictions on when we can do recasts and refinances.
What's a recast? What is that?
So a recast is when you're paying a large sum of money down towards your principal. Okay. And what we're doing is, if, say, for instance, and this is great right now with people who have houses to sell but aren't willing to wait to buy their new house. So what you can do is you go buy your new house, you close on it, you list your existing house. Once you have those proceeds, you can apply them towards a principal reduction. Okay. If you didn't do a recast, all that's going to do is just reduce your loan amount. Okay. If you did a recast, what we're going to do is we're re-amortizing your new loan balance over the existing term.
And it's only a couple $100, right?
I think they just increased it to a whopping $300.
Yeah,
right.
I think it's $350, but it's something like that. It gives you the ability to not have to refinance and still affect the payment. You keep the note rate the same. You just readjust the balance.
Yeah.
Now, something I love and I'm a big fan of. I don't know if you know this. I love doing refinances. They're great. But something I love is they give us ability here. We talked about refis.
Yeah. Yeah. So with the refis, I'm talking more about refinances in the last 3 weeks than I've talked in the last 2 years. Right.
Yeah.
And again, since we're servicing our paper, we don't have many restrictions on when we can refinance. At a previous shops I was at, hey, listen, we're going to close on this loan. I'm going to need you to hang on to that loan for 9 months.
Yeah.
Okay. Hey, I know interest rates are down a half point, but I did that loan for you. I need you to hang on to it.
Yeah, it's like a guilt trip.
Yeah. How often are people willingly able to do that? Not too frequent, right?
Right.
So
and why is that? Why do they make you wait?
Why they make you wait is what's called EPO, right? So that loan company needs to go and sell that loan. They need to be able to sell and get it over to Fannie and Freddie before they can have that loan paid off. Since we're not selling our home, or since we're not selling the servicing on most of these loans, we don't have that waiting period. I have 3 refinances going right now on purchases that have closed within 3 months.
Yeah, it's if they pay off the mortgage inside of, typically it's a 6-month wait period.
Yep.
If another outfits, if they pay off the loan inside of 6 months, all the revenue from that original loan is clawed back.
Yep.
Right? From whatever investor or whatever they're selling it. With us, I mean, we have the ability when rates drop to take advantage of it if it makes sense. Now you've got differences with, say, government. It's typically a 6-month because that's their requirement with that product. If you're doing a streamline or something along those lines.
Yep.
But it's the biggest game changer that you're not victim to me if there's a better loan out there. I can use the same appraisal up to 12 months.
Yep.
I can redo your loan if the market shifts, and it's so valuable, especially right now. I mean, as of this filming, we got a Fed meeting tomorrow morning, and it's going to be very interesting to see what happens next. What do you think is going to happen?
I think they're going to do a 1/4 point cut, and I think rates are going to stay the same, if not worsen slightly. And if I'm being honest with you, I'm kind of hoping that's the case so I can rub it in everyone's faces who decided not to refinance.
So.
And that's the petty part in me, for the record.
Why would, I know this answer, but I'd love to hear it. Why would rates stay the same or worsen if the federal funds rate goes down by 0.25?
Well, the federal funds rate isn't really tied to interest rates, right? We've priced in this 1/4 point cut for probably 2 months at this point, right?
It's about 30 days. About 30 days. We had the Fed come out and speak,
Yep.
and he basically said, "Okay, well, I could see us moving the needle." Well, he's telling the market that yes, we're as of this morning, we're at a 91% certainty rate that we're going to see a reduction.
Yep.
The question is it 0.25 or a half? Some are saying a half. This Fed has been very, very vocal. He's not trying to be aggressive with interest rates. Now, there's no one rate, right? There's no such thing.
Right.
It's just there's a relationship between federal funds and bond market and mortgage-backed securities, right? It's all a relationship thing. So when he opened his mouth, we had an adjustment, but that's already built in today. If it only goes down 0.25, that's what we all expected.
Yeah.
And we may see
go up slightly.
We might see some ticks up, right?
And I mean, it's and to go back real quick on the refi part, the one thing that I thought was big here too is that we can net escrows. Netting escrows is huge, right? Where you can reduce your loan balance from your existing, escrow account.
Yeah.
Right. But to go back to the rate front, right? I've only been pounding the pavement with that, right? Like, hey, this has been priced in. I like to say that mortgage interest rates react to headlines more so than they do data. Right.
Buy the rumors, sell the news, right?
Exactly.
That's the same thing happens with the federal funds rate. Tomorrow, our phones, I don't know if you have a busy day or not, but your entire phone's going to blow up with, I heard the rates moved.
Yeah.
And it's, you're saying the thing over and over and over.
I got a guy right now who sent me his mortgage statement. Derek, let me know when we get down to 4.5. I go, yeah, I'll set a reminder to reach out to you in 2032.
Those are my favorite. I just don't understand how this, it's just an arbitrary number. It's like, well, that's when it makes sense. But do you really like paying $200 more a month?
I'm like, no.
I don't understand.
He goes, Derek, I think the smart thing to do would be to wait. I go, well, the smart thing to do would not be pay 7.125% on $500,000 right now. Right? And then what I even did was I showed him, hey, in 2 years, this is what your principal is going to be on each of these programs. $15,000 delta. My favorite
is when I'm able to take somebody from those higher rates from previous years and put them into a 20-year.
It's the best.
And I have one right now. They're going from a 30-year to a 20-year. They're still saving $11 a month. You're going to save $280,000 in payments.
It's crazy.
But your payment still went down $11, and they're already paying extra on their mortgage already. It's the amortization, right? Is that you can't actually do what you're trying to do on a 30-year because the schedule's messed up. The beginning of a 30-year, you pay almost all interest.
Yeah.
And then in the 20, that principal is already built in, so you're already attacking it. Just paying extra on a 30 won't do the same thing as a 20-year. Well, right?
And that's why it's so important, like you like to preach, you need to talk to your clients.
Yeah.
Right? I got into this thing where I was just sending out rates, sending out payments. I was just blanket sending everything out.
Yeah.
And then you get someone on the phone, they're like, hey, I paid this thing down $100,000 last year.
And the fact we don't know that is insane.
Correct.
You're in the wrong loan.
Yeah.
You're in the wrong loan. I'm sorry. This was done incorrectly. I've done for 20 years. I was mainly doing 30 years.
Yeah.
Not thinking about what actually happens. And I shouldn't say it that long, but for a very long period, we were all conditioned that 30-year that's true savings. That's true savings. But if your client's paying extra on their 30-year, you're doing them a disservice. They need to be in a 20-year. They need to be in a different amortization, even a 24-year, right? Like something that makes more financial sense so that more of their payment is going towards principal and less towards interest. But you can't do by rewriting another 30-year to reset the clock. Right?
It's insane to me, right? Like all those people who did, the 15 years. I mean, my brother's at 2.1 right now, right?
Wild.
It's free money.
It's free.
Right? It's free.
That bank's pissed. That bank's pissed. It's locked up at 2 point. He's like, we can't even keep up with inflation at this point. This is great. Yeah.
And I mean, so now what I'm doing is I'm asking those questions, right? Hey, are you comfortable with your payment? Can you handle more? Because the way I see it, if you close in the last 2 years and you're not looking at a 20-year right now, chances are you're not really in tune with the market, or you worked with a loan officer who isn't.
Think about this, right? Everybody's so interested in the rates. They're so interested in these 2% and 3% rates that we had for so long.
Yep.
And they're so worried about the market because we have higher interest rates right now.
Yeah.
If we really extrapolate the data out and look at what's going on, what you just said is so powerful and nobody's paying attention to it. There are so many people who are in 20 and 15-year mortgages at 2-3% mortgages that are building equity at record numbers. Yeah. They're going to pay their house off. So when time goes through, that house is now paid off. Eventually, it's just math. People pass away, stuff happens, life happens. When that statistic hits, when somebody gets a new job, when somebody becomes an heir to that property, when whatever happens, that property is going to come back to market at some point, or that family is going to have equity that they can use to further their plans with whatever business they're starting, or student loan, instead of doing student loans or whatever. The amount of generational wealth that's being created right now is record breaking, because there are so many people who are refusing to sell their property because they're aggressively hitting their mortgage in record time.
Yeah, no, I had a guy yesterday, and his whole rationale for the 20 years was, so I can have this thing paid off by the time my kids go into college.
Boom.
Yes, you can.
Boom.
Right? He's like, and you can hear him sitting back being like, holy shit, why haven't I thought of this?
Right.
Right? And
he's sitting there thinking that, going, holy shit, looking at his kid. There's a picture of his kid on his desk going, yeah, all right. I don't care that the payment went up $200 a month. Yeah, this is for you. And that is some powerful stuff. It's having the courage to go through that with a client and go, yeah, man, so 15 years from now, where do you want to be?
Yeah.
Do you want to be in credit card debt? Do you want to be, paying this minimum payment? Or do you want to say on your deathbed, here you go, right? And God forbid, I hope nothing happens in 15 years to you. But how powerful is that you can give a property to your kid? How powerful is that you can give some actual assets instead of giving debt, which is what most families do. They give debt to their kids. They give, a fancy trinket.
Right.
This is a real viable asset. It's the most powerful thing you could possibly do.
For sure. And that kind of goes into why what we do is so important, right? My fiance at home, she works in mental health, right? And is there dealing with psychiatric kids and may have issues, and she comes home struggling from work because she's dealing with what people find is the most important thing to them, their children.
Can I just say I feel so bad because she's got to do that, and then she's got to come home to a loan officer, which just sounds terrible.
Then she's got to come home to me, right? She's got to come home to me. But so what she's doing
great.
is so important and so sensitive to these people that sometimes people act a little nutty, right? Or may not react the way that she thinks that they may. And I kind of draw the connection between what we do and what she does, right? What I mean by that is, what's the second thing people hold most importantly outside of their family? Their
house.
Money.
Their money. Yeah.
Right? Their money. Their
assets.
house.
Yeah.
And when they can rely on you to coach them and to give them the financial savvy, that's what we're doing here. We're not just originating home loans. We're helping people plan for their colleges.
I was on the phone the other day. This is real. I was on the phone the other day with a brain surgeon. Okay. And he's asking me, no offense to him, he doesn't know. He's working on brains all day. He has no idea about real estate.
Yeah.
But I'm sitting here pouring value into this guy, and I think about it for a second. I go, where am I right now? I have a brain surgeon on the phone asking me for my advice.
Yeah.
How powerful is it? I think I got up and I walk into Caroline's office and I go, I just gave advice to a brain surgeon. She did look at me and say, "You're not that smart. It's fine." But, I had to have the moment. I had that moment. I mean, all jokes aside, it is really powerful that what we do for a living, and we can't discount that.
Yeah.
Right. It is up to us to share the knowledge because you're going to change somebody's life.
100%.
Right. If we get this wrong, somebody gets divorced. Their kids don't go to college. Right. The decisions that we make are very, very, very important. It's where they put their kids to sleep.
Right.
Right. And so, we owe it to them to put that level of respect behind it, right?
For sure. Yeah.
Man, I honestly, I've had so much fun sitting here talking with you. I feel like we could go forever. It's really, really an honor to watch your career explode and how well you're doing.
Yeah.
And you're such a value to the team, man. Every time you walk in the room, you're just a joy to hang out with, man.
Yeah.
I love having you a part of this world. And thank you so much for coming on the show today.
Hey, thank you. You're a big reason I'm a part of it too.
Appreciate you, brother.